You were told the Canadian Dental Care Plan covers 100% of your costs. You have no other insurance. Your household income is under $70,000. On paper, you should walk out of that dental office owing nothing. So why are seniors across this country still leaving with a bill in their hand? Here's the part almost no receptionist explains to you before you sit in that chair. 100% covered does not mean 100% of what your dentist charges you. It means 100% of a completely different number. A number set by Ottawa, not by your dentist. And the gap between those two numbers can cost you anywhere from $40 to several $100s on a single visit, even though you did everything right. Stick with me, because later in this video, I'm going to give you the exact 3 questions to ask before you ever open your mouth in that dental chair. Questions that would have protected the vast majority of seniors who got hit with a surprise bill this year. And I'll also show you the one word, just one word, that separates a dentist who will bill you extra from one who won't. Now, before we go further, I want to be clear about something. I am not here to tell you the CDCP is a scam or that you shouldn't use it. It is one of the best things this government has done for seniors in a generation. My job today is simply to make sure you understand the fine print your clinic may never hand you, because knowing it in advance is the difference between a free cleaning and a $312 surprise. Let's back up for a second because I want you to understand exactly where you stand today. If you're 65 or older, a Canadian resident, you filed your most recent tax return, and you don't have private dental insurance through an employer, a retiree plan, or a spouse's workplace benefits, you likely qualify for the Canadian Dental Care Plan. There's no age cap on the upper end, and as of this year, the invitation letter requirement is gone. You can apply directly right now through your My Service Canada account, by phone at 1-8335-374342, or in person at a Service Canada office. The plan uses your adjusted net family income. That's the figure sitting on line 23,600 of your CRA Notice of Assessment to decide how much help you get. And this is where most videos stop. They give you the 3 numbers and move on. I'm not going to do that because those 3 numbers are only half the story. Here they are quickly so we're on the same page. Under $70,000 in household income, the CDCP covers 100% of what it calls the established fee. Between $70,000 and $79,999, it covers 60%, and you're responsible for a 40% co-payment. Between $80,000 and $89,999, it covers 40%, and you owe 60%. At $90,000 and above, you don't qualify at all. Simple enough, right? Now here's where the clinics stop explaining and where your wallet starts paying. Point number 1, the 2 numbers that never match. What is it? The CDCP doesn't pay based on what your dentist decides to charge. It pays based on its own price list, called the CDCP Dental Benefit Grid, published by Sun Life, the company the federal government hired to administer the plan. That grid sets a maximum dollar amount for every single procedure: a cleaning, a filling, an extraction, a denture fitting. Your dentist's office, meanwhile, is free to charge whatever their provincial fee guide suggests, and in most provinces that number sits noticeably higher than the federal grid. What is it worth? Let's put a real number on it. Say a routine cleaning at your dentist's office runs $220. The CDCP grid might only recognize $175 for that same cleaning. If you're in the 100% coverage tier, the plan pays the full $175, but you are still on the hook for the remaining $45. That's called balance billing, and it is completely legal under the program's rules. A recent industry survey of Canadian dentists found that only a small minority say they never balance bill. Most do it always, or at least sometimes, depending on the procedure. Now stack that on top of an income-based co-payment. If your household income sits at $75,000, you're already covering 40% of the CDCP's $175 grid rate. That's $70. Plus, you could still owe the $45 gap between the grid and the clinic's actual price. 2 separate charges stacked on the same visit, and neither one is a mistake. Both are allowed. How do they get it? Or rather, how do they avoid it? Before you book, call the office and ask this exact sentence. Do you bill exactly what the CDCP covers, or will there be an additional balance billing charge? Some dentists, particularly hospital-affiliated clinics, community health centers, and dental school clinics, agree to accept the CDCP grid rate as full payment. In the industry, that's called assignment billing, and it's the one word I promised you earlier, assignment. A dentist who bills on assignment charges you nothing beyond the grid. A dentist who doesn't will pass the difference straight to you, and they are not required to warn you in advance unless you ask. I know what some of you are thinking right now. If the government is paying for this, how is my dentist allowed to charge me extra on top of it? It's a fair question, and the honest answer is that the CDCP was designed as a subsidy, not a price cap. Ottawa negotiated a maximum amount it will reimburse. It never told private dental clinics what they're allowed to charge you. That decision stayed with the dentist. So yes, it's completely legal, and no, your clinic did nothing wrong by charging their normal rate. The problem isn't the rule. The problem is that almost nobody tells you about it before the appointment, and that's exactly why we're going through this together right now. Point number 2, the insurance trap that disqualifies you overnight. What is it? Here's a mistake that trips up seniors more than almost anything else on this list. Some retirees hear about the CDCP, realize they're already paying a monthly premium for a modest retiree dental plan through their old employer, and think, why don't I just cancel that and switch to the free government plan instead? That single decision can make you ineligible for the CDCP entirely, because the rule isn't about which plan is better, it's about whether you have access to private coverage at all. What is it worth? If you voluntarily drop your existing private coverage specifically to qualify, you don't become eligible for the CDCP. You simply end up with nothing. On the other hand, if your private plan only covers part of a procedure, say it pays for half of a denture but not the rest, you may still be eligible for the CDCP to pick up the remaining balance. This is called coordination of benefits, and it can genuinely save a retiree with a thin retiree plan several $100s a year on procedures their old workplace coverage barely touches. How do they get it? Don't cancel anything before speaking with Sun Life or Service Canada directly about coordination of benefits. If your existing plan only partially covers a service, ask your dental office to submit the claim to both your private insurer and the CDCP in that order, so the CDCP can top up what your private plan didn't cover. Keep your existing coverage in place unless a benefits specialist confirms in writing that dropping it is the right move for your specific situation. Point number 3, the provincial program nobody mentions in the same sentence. What is it? Several provinces run their own seniors dental programs that existed before the CDCP and still run alongside it today. Ontario, for example, has the Ontario Seniors Dental Care Program, which offers free preventive dental care to seniors 70 and older with a single income under roughly $22,200 or a couple income under roughly $37,100. Other provinces run similar programs at different thresholds. What is it worth? If your income is low enough to qualify for both, these programs don't cancel each other out. They can be coordinated so there are no gaps and no duplicate payments. For a lower income senior, that combination can mean the difference between paying a copayment at the CDCP's 60% or 40% tier and paying nothing at all through the provincial door instead. How do they get it? Ask your provincial Ministry of Health or search your province's name plus seniors dental program to see if a parallel benefit exists where you live. Then mention both programs when you book your appointment so the clinic bills them in the correct order instead of accidentally leaving money on the table or double billing you by mistake. A lot of you are also quietly wondering whether any of this touches your guaranteed income supplement or your old age security. It doesn't. The CDCP is not counted as taxable income, and applying for it or receiving dental benefits through it has no effect whatsoever on your OAS, your GIS, or your CPP. The only number that matters here is the income figure the CRA already has on file for you. There is no separate application that risks your other benefits, and there is no clawback tied to using your dental coverage. Let me walk you through how this actually plays out for a real retiree, because I want you to see all three of these rules collide at once. Picture a 71-year-old widower. His household income, now that he's living alone on CPP OAS and a small workplace pension, sits at $52,000 a year, comfortably inside the 100% coverage tier. He has no private insurance. His old retiree dental plan ended when his pension provider restructured benefits 2 years ago. He applies for the CDCP, gets approved, and books a routine exam, cleaning, and 2 small fillings at the clinic he's used for 15 years. He assumes reasonably that 100% covered means he walks out with a $0 bill. Instead, the front desk hands him an invoice for $312. His exam and cleaning were billed above the CDCP grid rate, a $58 gap. One of his fillings required a slightly more complex procedure code than the plan's standard rate covered, adding another $140 in balance billing. And because nobody at the clinic mentioned the Ontario Seniors Dental Care Program, which he also qualified for at his income level, he never got the chance to have that second program absorb part of the difference. Nothing about that bill was fraudulent. Nothing about it was illegal. It happened because 3 separate pieces of information, the balance billing gap, the coordination of benefits rule, and the existence of a parallel provincial program, were never explained to him in the same conversation. Individually, each rule is minor. Stacked together and unexplained, they turned a 100% covered visit into a $312 surprise. That is the entire reason this video exists. So here's exactly what I want you to do before your next appointment, whether it's your first CDCP visit or your 15th. First, call ahead and ask directly, do you bill on assignment, meaning you accept the CDCP's covered amount as payment in full, or will there be a balance billing charge? Get the answer before you book, not after you're already in the chair. Second, ask your dental office to put your estimated cost, including any balance billing and any income-based copayment, in writing before treatment begins. Most participating offices can print this from their CDCP claims software in under a minute. If they hesitate to give you a number in writing, that hesitation is itself useful information. Third, check whether your province runs a parallel seniors dental program, and if it does, tell your clinic about it before treatment, not after the invoice is printed, so both programs can be coordinated properly. None of this requires a lawyer, an accountant, or a complicated form. It requires 1 phone call and 1 honest conversation with your dental office before you sit down, and that single habit is what separates the seniors who genuinely pay nothing from the seniors who get blindsided by a bill they never saw coming. If this video helped you understand something your own clinic never sat down and explained, do me a favor. Send it to a friend or a neighbor who's about to book their own dental appointment. A lot of seniors are walking into these visits with the same assumption our widower had, and one shared video can save someone else a $300 surprise. Drop a comment below and tell me if this has happened to you, because I read every single one, and it helps me know exactly what to cover next. And if you want to stay ahead of the next rule change to your benefits, hit subscribe, because Ottawa is not always in a hurry to explain these details to you directly. Take care of yourself and take care of that smile. Just make sure you know the real price of keeping it before you sit down in that chair.